Hello everyone. Today we're going to talk about a brand new portfolio we have called the Van Winkle Portfolio. And Marcus Bickle, who's the manager, is coming on right now to talk to us about it.
Hello everyone.
My first question, Marcus, is why are we calling it, well, first of all, is it really a new portfolio?
Well, no, we've been managing it for a couple of years now on an unlimited basis, and we finally feel like we have enough kind of investment history to kind of roll this out as a more of a kind of a public offering.
So it actually has a new name.
Yeah, and we're rebranding it.
So we're calling it the Van Winkle Portfolio. Now, I did a little study out there to see how many people knew who Rip Van Winkle was. It's amazing who didn't know who Rip. Some young people knew, some young people didn't. Some more mature, we'll call it, people knew, some people didn't. But why are we calling it the Van Winkle Portfolio?
Well, the basis of the Van Winkle story is that he falls asleep and he wakes up 20 years later and a whole bunch of stuff has changed. Now the story's a little bit more in depth.
Right.
Than that. He's a farmer in pre-revolutionary America, and he escapes to the Catskill Mountains to escape a nagging wife, and all kinds of hijinks ensue, and he eventually falls asleep and wakes up 20 years later, and the world is different. Now, we don't really kind of advocate that laissez-faire attitude that Van Winkle has, but the whole idea of not being concerned on a day-to-day basis of what's in your portfolio, to be able to step away and look at it in 20 years when you retire.
Yeah, so not to be consumed with the minute-to-minute, day-to-day numbers that we all get thrown at us.
That minutia.
Every day.
Absolutely.
It doesn't allow us to do the right thing. And you and I have talked about this before. We might have a stock in there that we bought for $2.50 and it goes to $5 and we're selling it, right?
Yeah.
Well, who could fault you for that? You doubled your money.
100% profit right there.
But is that really the philosophy that you have? What are you putting in this portfolio? What kind of stocks? Because I think you're doing some, depending on the size of the portfolio, you do some indexes. But what kind of stocks are you looking for that somebody would put in there and then 20 years from now take a look at them?
Well, I mean, I like to consider myself something of a futurist. I very much believe that, we're going to colonize Mars, that, we're going to have cybernetic limbs and all of those things. And that may sound crazy, but it's not as crazy as you'd think.
Beam me up, Scotty.
Absolutely.
Don't break apart my cells or whatever.
This is a little far afield, but I have this general idea of did science fiction influence technology, or does technology influence science fiction? The people who made the cell phone grew up on Star Trek. Did that influence the idea of the cell phone?
We want the flip phone back.
Well, those are very popular, but that's the idea of these emergent technologies, things that are going to change the world, for better or for worse, but they're going to make a lot of money. And those are the technologies I really kind of target. Big ones that you'd be familiar with, Amazon, Tesla. And then smaller ones, like some of these smaller electronic vehicle makers, things that might be invested in kind of renewable energies, all kinds of really kind of niche technologies that might be the next biggest thing.
Well, even Amazon, and we talked about it, Dennis and I talked about this before. Amazon was a place to buy used books.
Oh, absolutely.
Books. They never made any money. And I personally bought some after it kept going up at 14. Right?
Mm-hmm.
And I think I sold it like at 120, thinking I made a killing.
Yeah.
Right? Now, philosophically, it would have been better if I had sold half and let the half ride.
Yeah, keep your initial investment and let the rest continue forward. Mm-hmm. And now we have, obviously Amazon at $3,200 a share. So
oh, don't tell me that. Oh no.
But one thing I do want to kind of emphasize with these portfolios, and why we do really push for that kind of that hands-off approach from the investors themselves, is that there will be things in there that may not go to $3,200 a share.
Yeah, it might go to zero.
That might go to zero.
It's happened.
Every new technology isn't going to be the next greatest thing, and I don't have a crystal ball. Otherwise, I'd be on a beach somewhere. So.
Right. But I mean, philosophically, you were talking about things like you think about outer space and how many things we have today in our world that came from what they did from space stations or on spaceships. The drill, cordless drill, that was done
entirely by NASA, right? And
so there's a lot of those kinds of things that we're looking 20 years ahead. And as you said, everything is not going to be successful, but I would guarantee you in 20 years, you'll still be way ahead. In fact, in my portfolio, I had an investment that went to zero. It was $30,000. Don't tell anybody I said that, okay? Went to zero. Now, I've not only made all that back, but twice as much based on some of these investments that we have or that Marcus has recommended. So we are, again, not promoting that you don't pay attention, but yeah, we are kind of saying just close your eyes for a couple decades, and if you can put a little bit in each month, that gives him more money to keep investing in the newer things that come out, right? Because if you're just sitting there and holding the stocks, you won't have any cash.
No, exactly. And this really, the whole idea of this portfolio really boils down to something that I learned when I first entered this industry, is that if you're in the market long enough, it eventually ends up higher. And it truly does. If you look at a chart of any of the major indices, they always trend higher. Now, it takes time. There are dips, and those dips really hurt if those are when you're trying to retire.
Correct.
But if you have enough time, it always goes higher. Like look
Just
at
have to live long enough.
yeah, we're coming back up on what is it?
30,000.
30,000 again.
On the Dow Jones. Actually, I can remember when, I think his name was Harry Dent, back in 1985, I think, predicted the market would be 30,000.
Which was absurd.
Well, yes, because it hadn't even hit 1,000 yet, 1,000. It was just barely ready to do that. And so we all just kind of laughed. So that's just proof that if you say something long enough, or if you do something long enough, eventually you're going to be right.
And to put that into context before we finish up, that's like someone today saying the Dow is going to be 300,000 in the next 20 years.
Wow.
So.
And we all go, no way, no way.
That's impossible,
yeah,
right?
It's not going to happen, right? It's not going to happen. But so this is a great strategy. Typically, we're buying low price stocks if we can get them. If we can wait, if there's an initial public offering, like we just saw on DoorDash and Airbnb, which I figured out where the air came from.
Yes, you did know that.
An air mattress on the floor is how they started this.
Makes sense.
Anyway, so it's air, bed, and breakfast, and they gave the people breakfast, something like that. But once they come down, if they come down enough, then that's going to be in that portfolio.
Those are definitely the kinds of things I'm aiming to hold.
If we can.
Yeah.
You know, and then there's companies you'll never have heard of. You'll be like, what on earth is this? You know, and you'll call up Marcus and say, what is this? And he'll explain it, and then you'll say, okay, I'll talk to you in 20 years.
And frankly, I love to talk about that stuff, so please call me.
So we're hoping that you too will adopt the Rip Van Winkle attitude and start a small portfolio for yourself. I shouldn't have said small, but a portfolio. You can start with how much?
Realistically, I could take almost any amount, but I would like to start so that I could really kind of fully invest it. 20,000.
20,000. That's not too bad. Or maybe even if you started with a little less and you committed to adding.
Absolutely,
that would
definitely
work, because adding is really important. And the last thing I want to say is this is how important this is. We just talked about 20,000, but if you were, let's say we're both 20. Okay, we're both 20. And Marcus is very conservative. So the first 8 years of his life, he puts $2,000 away, and it earns 8%. But then at 28, he gets married, he has kids, he doesn't have money. Can't
a lot of bills.
A lot of bills. And by the way, this isn't too far from the truth, except he's not 20. And me, I'm this, I can play today, you know, what's that, the grasshopper and the ant story.
Oh, yeah.
Here again, nobody will know what I'm talking about, but grasshopper and the ant. And I'm the grasshopper, and I'm playing for 8 years while he's saving money. And then, you know, in the 9th year, I think, maybe I should start. I get a better job. Yep. I've had enough playing around. And I start adding $2,000 every year until I'm 65. Retirement age. And if I look at my portfolio at age 65, and I look at his, and remember, he only put $2,000 in for the first 8 years, and he stopped, never put any more in. He will still have more money than I will. That is the value of time and compounding.
Early and often.
Early and often. So we hope you enjoyed this, and we hope you will give Marcus a call and talk to him about the Van Winkle portfolio. We might even create a little dance for it.
Thank you all so much.
Bye.